Welcome to the Trading Lounge, and here we're looking at the US 30 here, and we've been headline driven from the Cyprus situations. So it just seems to be panning out to a larger corrective pattern, moving sideways across the market here. We're looking at it as a flat correction. It could possibly be a triangle as well, but more so like a flat correction that's just about finished. So just a larger ABC. So an A wave to here, a complicated B wave to here, and a simple C wave to here that should be complete now, or one more little move down through here to complete that. If there was going to be a larger bearish market, then the 14,300, the top of minor group 1, would have to become the resistance. This 144 here is also important as well. So this as retested resistance would be like a warning sign that lower prices could come, but we wouldn't confirm it until this was done and dusted here at this point here. Any long trades from here would still require the 14,500 as a tested support. Yes, and the S&P 500 is the same pattern as well. This is just a 2-hour chart here. So we're looking for the completion of from B wave to C wave here, which would be very similar to the A wave here. It could be completed already through here. If I just break that down a little bit into a 30-minute chart here, we're looking at C waves, 5-wave structure. So we'll be looking at this in terms of a 5-wave structure down through to here. Look, this may be a little wave 4 sitting here, and then another little wave 5 to come down. Let's just allow that to sort of play out through that. But it could also be completed here as now, and that would be the 3rd wave, obviously in the middle through here. I'm just not sure if we've got 2 series of waves 1 and 2s within here. If that's the case, then will be one more wave to come down through here. The European markets are the same but different. So the DAX here in its correction across the 8,000 here would be the A, the complicated B, the same as in the US indices, and a C wave down through to here. This little pattern here may not be complete, and we'll see a little move down through to 78. Then we'll get our bounce from there. FTSE's same but different once again, and be looking at its C wave breaking out of this situation into the 63 here. If that was the case, we just need to allow this to play out. The Australian market is a slightly different kettle of fish. So the move down through the move down through here now is starting to well, thing is, an A wave can be, it's a little bit complicated with the A waves, because the A waves can be in 3 waves, or they can be in 5 waves. A B wave's always in 3, and a C wave's always in 5. So, but normally we understand that if we do get 5 waves down here, then we get a 3-wave counter trend, and then we get another 5. So if we get 5 here, we're going to get 5 over here. And that seems to be the case. So just sort of breaking this larger pattern down, this one down through here, because this would be the we're looking at this possibly as an A and a B and a C, but also being mindful that it can be 1, 2, 3, 4, and 5 down through to here, and that bias is sort of coming in now, especially because we didn't get support on top of the 5,000 there. So we had this counted here as an A and a B and 5 waves here for the C wave, and looking for possible support through up here. But this particular move up through here at the moment appears to be in 3 waves. So we really need, because that 3 waves would make it corrective. So that means we have to label this now 1, 2, 3, and 4 here, and then down for 5. Now, it does bring up another problem, is that the 4th wave 4s are normally complicated and sideways. That plus working with this large number here just indicates more choppy price action to come. So with the wave 4 here, we may just a wave 4 can be a triangle, for instance, which is 5 waves. So we could get something like an A and a B and a C and a D and an E, and then the wave 5 down. I don't know. The wave 4s are just complicated and tricky little suckers. So, yeah. So let's go to the next chart here. In this one here, this is just the 1 hour chart, just sort of breaking it down once again. You can clearly see that we've got this 3 wave pattern through here. And look, you know, we don't trade the breakout through a particular number. We wait for the retest, and if the retest finds support, well then great, you know, then we scale in through the smaller numbers and off we go. In this case, it didn't find support there, and we're getting this this larger pattern down. So this could be the top of wave 4 here, or it could get a bit more complicated. Just don't know. But in looking at this little structure to the downside here, if we break that down further, this is it here on a 20-minute chart, we can start to see, you know, because if this is 3 waves to the upside here, that's what triangles are. They're sets of 3 waves. So this can also be 3 waves as well. It could also develop into 5 waves. So look, if we call this one down for wave 1 here, and this one here for wave 2 here, then we would be looking at wave 3 to come down through here. And in wave 3, there's 5 waves. So we would have, I'll just use this tool here. It's a little bit quicker. So this little, in from wave 2 to wave 3 here, we would have waves 1, 2, and you can see how you got 5 waves here. You got 1, 2, 3, 4, 5. So we could put that 3rd wave there. This would be the 4th wave to here, and then the 5th wave down to here to make the 3rd wave. Okay. Now, in making the 3rd wave, once that's done, then we would have a 4th wave here. So we can put the 4th there. And then we can put the 5th wave down through here at the 49. Now, moving into group 1 here, so we've got the Fibonacci numbers 1, 2, 3, 5, and 8. So the wave 4 here normally pulls back 38.2% of this. So we would be going from wave 2 here, excuse me, to wave. So there's your 38.2, and it's at the midpoint, the 49.50. So this wave 3 here to wave 4 here, that would also pull back 38.2%. But what we normally find, it pulls back to the 4th wave of 1 lesser degree each time. So we'd be looking back into here. But remember, wave 4s can get complicated. So this little A, B, C here may be only the first leg of that. So we may get an A and a B and a C here, and then drop down, making a new low here. Then another one back up, and then from that point there, then down to here. So just pointing out that it's all going to be like pretty choppy here as such. So not only are you working in group 1, in Elliott terms, we don't normally trade wave 4s, and using the trading levels coming down into a market, a down market into group 1, 10, 20, 30, we don't trade in these levels here, because all the orders are going to be sitting at 10, 20, and 30, because, you know, they're the biggest numbers. They'll attract the most orders sitting there. So it gets very bouncy, and it's, you know, time you cut in your spread and trying to, you know, get your sort of 7 points or whatever, or 10 points, it's too difficult. So unless you're going to hold it for the longer term. So look, if we do get this 5 waves down through here, then that will be the completion of that bigger structure back up through here, that 5 waves down here. Once we've got this 5 waves completed down here, if I just go back to the next biggest one, if we get this 5 waves down here to make this 5th wave, which could be brought up here a little bit, I guess, that 5 waves there, then because we've got this larger 5 waves here, then we're going to get an A and a B and a C wave back up through here, and then we'll get another 5 to the downside. Obviously being brought down by the material sectors, but I was looking at some of the US banks as well, and they're getting a bit softer at the top as well. So it could be the finance and the material. So let's have a look at copper and gold and perhaps even BHP. Okay, this is copper here, and we're still in our corrective rally. So I think the best way to sort of consider this is that while the market's above the 340, the closest largest number, then we need to consider it well positive within its rally, even though even though we're looking at a corrective rally in terms of an A wave, then an A and a B and a C for the B wave, and then a C wave up through to here as a retest of the 350, and then roll over from that point. So yes, it is corrective. We have to treat it as positive because it is in a rally, but being mindful of what it is. While this has been in a bit of a rally, it's just a 1 hour chart here. If we look at BHP in the US here, we understood that even over the last 3 or 4 days here, this was a corrective pattern within here, and it's still got more to fold out through here as well. The same as the Australian market as well. Through here, there will be support at the 33, which is also the top of Group 1 as well. So we've got 1, 2, 3, 5, and 8, same sort of thing. So it's got further to go, but it's going to find, well, obviously it's going to find support here, so it's going to get choppy within here. So if you're shorting it for the longer term, then you're going to need to give it space to unfold. If you're trading it short term, then you need to stay on top of it. Right, the other side for sort of supporting further downside, obviously, is the US dollar here. We'll look at this more with the currencies, but bottom line is that once it's back up above the 83 here, then it's going to place pressure on commodities. So yeah, and obviously currencies as well. The gold market is as you know, we're looking for a fourth wave through here, and we may have a top in here, but it just doesn't count that way just yet. The move down through here is actually in 3 waves. So if we're in a bull market going up, or in a trend going up rather, and we get a 3-wave counter trend, well, that's actually a bullish sign. So we should see prices come over this high here and still complete one more wave structure up through here. Of course, if I'm wrong, that's fine too, and that would be at a point where the 1600 becomes the retested resistance. So it's not just enough for a price to spike, market to spike down. When it comes back and tests supply, the supply must be, overwhelm the demand and lock it in at that particular price point there, and then, then look for weakness at that point. So, you have to be there at the time, and you have to be able to recognise certain things, and there's many things that make it up, and there's many roads to Rome, many ways to sort of view things. I like price action, the Elliott, and also the volume as well to confirm such things. Now, look, when you're looking at a corrective pattern through here, if you look at the 50% back up through that, then work to the closest largest number as support. So you'd go along on the 1610. Only if it, moved above it, then came back and found support, then you would use the little group 1 within that. The group 1 at 1610 would be 11, 12, and 13, and if it found support on 13, then you would add more and get yourself up to 15, so forth. So same thing. So yeah, at the moment, if this does drop down through here and become the resistance here, and then looks like we're getting a larger 5 waves down, then we'll be short from that point, and then we'll call that wave 4 in. But it's just not there yet. Silver looks a bit looks a bit more sort of bearish on the ground here. Don't worry about the wave count too much, but this this is a corrective pattern, this is a corrective pattern. Will we see one more push up through here? I don't know, but you know, this is the line in the sand here. This, well, group 2 here is, and the 72 is the most important thing here. So any short trade would require the 72, the 28.72 as a retested resistance, and then looking to build a trade on the short side on a retest of 65, then a retest of the midpoint, the 50 here. Any long trade would need the support of the 29 from that point there. You know, we were looking at a little 5-wave structure here to the downside, and that's still in place because of that high there. But we need to also sort of see it as an A and a B and a C wave coming down through here as well. So this B wave could certainly go in through here, and if there was a move to the upside, then we'll be looking for 5 waves to the upside here, which should be about the same length as the A wave here. So basically an A and a B and a C if it's going to be growing in size further for the larger wave 4 there. Otherwise, it's just going to work down, and the way that it will work down would be these little 5 waves down here for wave 1, the A, the B, and the C for wave 2 here, and then we go down in 5 waves through here, then a 3-wave counter trend failing at the 29 or thereabouts, and then working down from here. So what you'd likely to see if it was going on the short side is a move to the 29 and then locking under there this time, and then that should be a good short trade to the downside from that point there, or we're going to get 5 waves up through here. So either way, you shouldn't miss it. It's just allowing it to unfold. It's getting itself into a corner, and it needs to come out shortly. Okay, the oil market is looking at that moving up to the 95 here, and that's done that. There's going to be, I mean, the higher US dollar is going to place pressure on that, but there's also the influence of stock as well. If the economy is going to do well, that means the S&P 500 is going to be up. They need oil to power the situation, so oil will follow. We were looking for 5 waves up through here, and you can see that we've got like a little 3rd wave in the middle here, nice and strong. So this would be the 1s and 2s in here, the 3rd, the 4th, and the 5th here. But I still think there could be another little one in here before that's sort of completed. But I do suggest that we just wait here now to see if that's actually the completion of that. But what we will see in one way or another is we will see the A, B, and a C through here. If we get that 3-wave correction through here, if it is 3 waves, then we'll see a move to the upside through here. If not, then we'll see this. Fail to the downside like this through here on a second retest of the 95 and move down through here. So in both cases, I think there's one more little push up through here, and then we'll see some type of pattern across here. And if it is a corrective pattern and it finds support, then fine. If 95 becomes a tested support, we need to start moving in long from that point. If it fails at this level here, then we can call this top in play, and we can trade it to the downside. So we were looking for support on 93 to get to 95. That's done. We need a pattern here now. Markets are trends and corrections of different degrees, and this degree here that we need to work through here. Alrighty, let's have a look at FX and that important US dollar. Okay, the US dollar just once again through here. As you know, we were looking for an A wave, a B wave, and a C wave down for wave E. There's obviously the spike there that's a little bit sort of uncontrollable, but you kind of like you just sort of forget about it in one sort of regard, but it still gives us that 3-wave counter trend as such. So we should see further upside now, and finding support on 83. It needs to develop as well, of course. So it's a bit tricky to count that wave structure up through there. If I kind of forget about it, I know it's not the right thing to do, but I would consider this like the 1, the 2, the 3 here, the 4, and the 5 coming up and finding some resistance up here, and then having some sort of little, corrective pattern across here, and then edging higher through here. So once it's made a new high here, it will come back and retest the 83 before further upside as well. But this all gives, this further upside for the US dollar would see obviously the BHPs of the world to the downside. It would see the euro further to the downside as well. So in having a look at the euro here, we're looking, if the 130 gave us support, then we would be looking further to the upside and a larger correction to the upside, but that wasn't the case. So we've got our on the 30-minute chart here from this last low here, we've got our counter trend in 3 waves, and now we're looking at 5 waves to the downside as well, pretty much in line with the indices as well through here. I think there's a little bit more to go in here. So if we just pull this trend apart while we're here, and that would be something like this here. So we'd be looking at from the high up here, we'd be looking at wave 1 down to here, wave 2 to here. And then the market pretty much expands down to wave 3 here, and this is how I've got it sort of counted here, down for 1 here, back for 2 here, and then we've got down for 1, back for 2, down for 3, 4 and 5 for the third one. There'll also be 5 waves in here, but I'll leave that for you to deal with. And then wave 4 here, pretty much down for 1, back for 2, down for 3, ABC for 4th here, an extension coming through here into the 5th. This will be wave 3 here, so the wave 4 here should pull back to the 4th wave 1 lesser degree, which is here. But wave 4s get complicated, so we may see more of this. So it does appear that we've got 3 waves up there. So I thought an A and a B and a C wave coming up to here, then rolling out down to here. Once this comes down to here, as wave 5 of wave 1 here, then we'll see, and that would be at the 128 here. So we would see the wave 4, the wave 5 here. And when the euro sort of retraces, it's been doing shallow retracement, so it's not going to pull all the way back. But if it comes down to the 128, expect a 3-wave bounce off here, and once that's completed, then if it is 3 waves, then we've got ourselves a nice short trade on there. You can also short it once you can count 5 little waves in through here for the wave C, because the wave C is in 5 waves. Then you can short from that place. So I can put the B wave there, and that would be reasonably okay to do that, because a B wave would pull back 61.8% of the wave A there. Still, let's just see how it goes. What we're looking for is 5 waves up, the 1, 2, 3, 4, and 5. The C wave should be the same length as the A wave, or pretty close anyway. It'll struggle. You need to work all of group 2 here for that. But if it does go up through here, gets above the 80 here, and then gets back and gets trapped under the 72, well, that's where you can get your first short, and then under here as well, and then under here as well. But once again, it's going to get pretty sort of bumpy down through here as well, and this is the sort of thing it does through here. So it's a bit tricky in here, but look, anyway, we'll keep tracking that and look for a larger setup through for this as well, because this market can go a lot lower. The Australian dollar is a little bit different. We're pretty much calling this triangle pattern in here completed as the major sort of wave 4 here. This is a weekly chart. So I think this is quite interesting really now, starting to sort of heat up. But once again, the 105 through here is the main sort of balance line through here. So we would need support on that. If we get support on that, it's just not enough to pop its head up. It's got to pop its head up and then sit back on there. Once it does that, then we'll be looking for a wave 3 to the upside, which would be quite strong. So let's just take one step at a time and not get too excited about it. But let's just allow the we're tracking 5 waves up through here at the moment. Once they are completed, then we'll see an A and a B and a C wave, and then we want support on the 105, and then we can trade for a longer term long trade to the upside. So just breaking that down a little bit, those just come back here. So moving from here up to here, we've been tracking those 5 waves and looking at that here. This would be it here. So we've got wave 1, wave 2, wave 3, wave 4, and wave 5. So even from this point here, I've got the wave 4 here. And if we do that, we've got wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 up to here. So it can be complete there. And if that is the case, then we'll get the A, the B, and the C here coming into play, coming back to this whole sort of support level in through here. So if that is the top there, then we have to expect this. And then our long trade will be looking from, you know, from in here, depending on how clear that is here. The other thing is that when I've taken the wave 1 to here and wave 2 to here, I've also got to come back and look at this as well here, because this, from this point here, this could also realistically could be a wave 1 to here, and then a wave 2 back to here, and all of this can just be the 3rd wave up here. Then we've got the 4th, then the 5th wave coming up through here. Then we get this A, B, C thing through here. So a little bit, just, you know, I'm just exploring possibilities. So, but I know that in using the levels in one way or another, it should pop its head up here. There should be some correction pattern across here. Once that's done and dusted, and then we've got support, then we've got our trade. So just be a little bit sort of careful. We basically wanted a nice correction across here before we get our trade, but just basically breaking that down a little bit. As you know, we've been looking for this 5 waves up, the 1, the 2, the 3, the 4, and it does appear that this is somewhat sort of complete here. So we need to start looking at, I've just done this one here as a small correction, but the larger ABC can come back to the wave 4 here of 1 lesser degree through here. So this wave that I was talking about would be in here as such, because it's coming back a little bit. We've got 1, 2, 3, 4, 5 here for the wave 3. This could be the A, the B, and the C here for wave 4. So that wave 4 could actually be here. And then we're looking at this being wave 1 to the upside, back for wave 2, and all of this being wave 3 here in terms of 1, 2, 3, 4, 5. And then this would be actually a wave 4 here, really coming back to the wave 4 here, and then seeing a wave 5 up to here. So, but either way, we can expect a little ABC across here before we see anything else. So, you know, if the 104.50 becomes the retested resistance through here and starts working in through here, then you know what to expect, and we can be looking at these lows back down into this area through here. But look, anyway, I just thought I'd mention that because I think that's a nice trade there. So I think that probably the better trades, if you're an industry trader, would probably be moving over to the forex, probably the euro first in a short trade, and later on the Australian dollar in the long trade. Alrighty, well that's it. I'm back in Sydney, and I apologise if I haven't answered any emails. I just had to spend a bit of time with my family in Perth. Didn't even get to the expo over there. But look, I'll catch up on my emails this morning. So, alrighty, well good morning and good luck.